Auditor Nancy Schulzenberg to present our audit to you.
All right, that's a little bit, can we make it taller and further back, or just hold this here? Does it turn this? I do.
Now watch, I'll break it.
There we go. How's that?
If I stand here and just hold it.
I think this will work. All right. Well, good evening, everyone. Thank you for allowing me some time to go over the results of our audit in this more informal environment. So as I go, if you have questions, feel free to jump in and ask them or save them till the end. Either way works for me. So I want to start out tonight by talking about the communications that we issue. Now I have to figure out how this works.
I will run with it.
You will, okay. All right, good. So starting with the independent auditor's report, which is basically our opinion on the financial statements. And if you do want to read it in its entirety, it's about 3 pages, a little bit more long, and you'll find it in the front of the financial statement document. In summary, the second paragraph is going to be the key, and that is where the opinion is housed. And we're issuing an unmodified opinion again this year, which is an indication that everything is fairly stated in all material respects based on the results of our audit. So that is a clean opinion and the best that we as auditors can offer. And then we have 2 other formal letters this year. The first one is our report in accordance with government auditing standards. These standards are required because of some of the funding that you receive as a city, and it requires us as auditors to look closer at internal control and also compliance with laws, regulations, contracts, grants, those types of things. And based on our work, we do have the 1 internal control finding for lack of segregation of accounting duties. This isn't new to Fergus Falls. It is not at all uncommon for cities across the state. Basically, there are just some duties that overlap. Primarily in the areas of payroll. It's most efficient to operate that primarily with 1 person, so that's what's happening there. And then the overall access to the general ledger with your finance director having that access and some day-to-day responsibilities. So again, not new, not at all uncommon. We did not note any non-compliance required to be reported in accordance with those standards. So just the one finding there. And then our last official letter is our report on Minnesota legal compliance. So each year, the Office of the State Auditor gives us a checklist, and we complete that checklist. It covers 7 broad categories of legal compliance, and based on our completion, we did not have any findings there as well. And then we have a separate document, the communication letter. In there, we have several pages titled Required Communication. So those are all the things that our audit standards require us to put in writing to you as the governing board for the city. And it would be our tool if we had anything significant we uncovered, anything unusual, difficulties with management, any disagreements. Happy to report none of that area strays from our standard language. So clean bill of health, if you will. And then we have financial analysis, which we'll cover tonight. And then in the back, a little light reading, 2 new GASB standards, Government Accounting Standards Board standards that will be implemented by the city in the next couple of years. So more fun stuff for Bill and his team to work through in putting that financial report together. All right. Moving then to that financial analysis, starting with a really high-level look at your general fund. So what you're seeing is the fund balance over the last 5 years, and you can see that each of the last 3 years have shown increases. There was a bit of a drop in 2022, and then increases since then. Overall fund balance was up about 1.2 million in 2025. And when we look at the categories, unassigned is the largest category in the general fund, which makes sense. And you have a fund balance policy that outlines a minimum of 35 to 40% of the working capital budgeted expenditures. And when we look at the 2026 budget, compare that to your unassigned fund balance, it's at 53.5%. So definitely a little bit above that minimum fund balance policy. So in compliance there. And taking a look, again at the general fund, high level, total revenues, total expenditures for each of the last 5 years, definitely on an upward swing, which is what we would expect with increasing costs of everything and some revenue differences. So overall revenues up about 4.9%, expenditures up about 6.4%. So when we look at just your revenues and just your expenditures, you did exceed the revenues coming in with the expenditures going out. When we factor in transfers, capital type items, leases, some insurance recoveries, all of that led to the fund balance increase that you saw of 1.2 million. Digging into the details a little bit more, we have a few charts to take a look at your general fund revenues. And again, we give you that 5-year perspective, but really want to key in on 24 versus 25. So overall, we had that 4.9% increase, about 730,000 in increased revenues, coming across primarily 3 categories. First of all, your taxes were up with an increase in the levy for the general fund for the year. Charges for services up about 108,000. Most of that is due to the aquatic center opening in 2025, so you had some increased fees there. And then finally, miscellaneous is where you see your biggest jump. That number is up about 303,000, which is 48.7%. A great year in the investment returns. I think it was a 7.5% return on investments for 2025, which is an improvement over 2024. And then we have the budget to actual for those same revenue numbers for 2025. Overall revenues were about 10% over budget, or 1.4 million, and 2 categories contributing most significantly to that. First of all, intergovernmental revenue. You had a state grant that was for the purchase of some land or property for future workforce housing project that came in 2025. Also some other miscellaneous state aids, police, fire, and a small federal amount that came in that were not included in the budget. And then the other category that was over is that miscellaneous, which includes those investment earnings. So that is about 523,000 over budget. Other categories really right in line with what you were anticipating. And then one last way that we look at your revenues in the general fund is comparing them as a percentage of the whole, those sources. And if you look at the 2 pie charts, they're very similar from 24 to 25. You'll see a bit of an increase in the miscellaneous category, and that has to do with those investment returns again. So that went from 4.6%, which shifted some of the other categories down a bit. But again, very consistent year over year. All right. Then switching gears to take a look at the other side of things in your expenditures in the general fund. So like I mentioned earlier, those were up 6.4%, which is about 993,000. Some fluctuations between the categories here. The largest increase is in capital outlay. In 2025, you had down payments on the fire truck that came out of the general fund, and then also a parking lot at the old flour mill site. So those were increases that you saw there. Culture and Rec was up about 130,000 related to that aquatic center. So you saw the increase in charges for services and also an increase in expenditures. Your public safety was up. That is your largest category of spending. So cost of living increases in wages and some of the overlap in transitioning happened there. So overall wages and benefits were up. And then offsetting those increases, there was a decrease in the general government, and that came across several categories with reduced staffing in planning and zoning, general government buildings, and communications. So a lot of things going on there. Other categories pretty consistent with the prior year. And then like revenues, we have the budget to actual chart. So like revenues were over budget, expenditures were under budget. So it gave you a good picture for the year. Expenditures under about 9.5% or 1.7 million. A large portion of that is your capital outlay. So under budget, just over $1 million for the year. And that just has everything to do with your practice of planning for the future and allowing that budget carryover for each department. So allowing savings so that you aren't issuing debt for every little purchase that you need to make. So again, planning ahead. Culture and Rec was under. The ice arena had lower utility costs. The aquatic center cost a little bit less than what you had planned in the budget to open. And then also there was the planned opening of the campground that didn't happen in 2025. So those contributing to that difference there. Streets and highway was under about 180,000. Lower amounts of snow and ice removal for the year. And that really fluctuates just based on the winter, and we can't predict that, especially in Minnesota. And then general government was under, you had some transitions, vacancies that happened, and then also some unspent retirement payments that will occur in the future. Didn't happen in 2025.
Can I ask you a question on that slide? I'm
Yes.
sorry if that's okay.
Yes.
Debt service was over by a lot, budget versus actual. Can we talk about why that's over by 27,000 or 26?
The lease payments are in there?
Yes.
Yes.
I transfer them when we, roll up the SB 87. I think so, for that.
Yeah,
We
so
don't budget for them there.
you don't budget for them
Right.
there. So it's, the leases are
The
recorded.
intergovernment, like our leases to ourselves?
No,
No, our leases like for copier machines, things like that, they're budgeted under like equipment rental right now. And then to roll it up for the auditors, I need to move that over to debt service. And Sandy and I were just talking last week, we could even transfer some of that this year, so I don't have to do it at the audit time.
Yeah.
And get it put to there during the year. So it's budgeted for under the various departments.
Okay.
But then.
Audit
for the
time, it
December,
moves.
I
Yep.
move it over to
Okay.
there,
Okay.
yep. it's,
Okay, it just looked way wonky, so, okay.
yeah, it's a small number, but it is, as a percentage, definitely
Right.
way over, but that, yeah, that makes
Good
sense.
catch.
We do the, we do those accounting things that
Yeah.
create issues with budget to actual statements, and yours isn't very much compared to what some cities see as, you know, the fluctuations. They put a contingency in general government, and then they use it wherever, and they don't modify, so. All right, then we have the two pie charts similar to revenues for where you're spending your money, and these are even more consistent than the revenues. So if you put the pie charts on top of each other, they would be virtually the same, just a little bit 1-2% fluctuations just based on what was going on in the changes that you had. So sound expenditure function spending so that you can budget without those significant fluctuations. It's easier to plan when you're spending consistently year over year. All right, so that's the general fund. Any other questions on the general fund?
I have one other one if
Yep.
nobody else does. Going back to the general fund expenditures, on sanitation, if you look at all the different categories, they've been pretty consistent over the last 5 years since 2021. Sanitation, it's not a huge number, has in essence more than doubled. It's gone from 42,000 to 85,000. What causes a double in 5 years? I'm sure it's legit, but I'm just, compared to the
Yeah.
growth in others, it's very significant.
We would not have looked into that because it's a small number, but maybe Bill has an answer for you.
Let me think, so sanitation includes our animal control, weed mowing, where we go out and have to, and, no, tree removal's not in there. It's the weed mowing and that.
And it's not a big deal, it's curious because it's
Yeah.
a significant growth in 5 years.
Yeah. No, I think this is pretty much animal control and where we have to go out and do the weed mowing. I'll have to look at it so I can pull it out
Sorry.
exactly for you. No, it's a really good question, and,
So there's some income too there then.
yes, we do have charges out on the other
Right.
side of that as
Yep.
well.
Okay.
Yep, for when we do
Right.
mowing.
Right.
We have a flat fee for it and then an administration charge on that. And if we have to come do it a second time, a third time, those jump. Is it like, it starts at 50, goes to 100, and then it's another 100? Because we don't want to be out mowing people's property. That's not, you know.
Okay.
Yeah, that's a good question, though. I will pull that and just see if there's anything else in there I'm not thinking of on the top of my head.
Bill, when we mow, do we do that, or do we,
We have a
Farm that out.
contractor do that, right?
okay,
Yeah, we do have a contractor.
all right,
It's not city staff.
But we do an admin penalty on top of that.
Yep.
For all the letters and the chasing down we have to do, so.
All right, anything else? All right, then we'll move to your enterprise funds, and you have your utility enterprise funds, and that's where we're gonna start. So waste management, a nice increase, 7.3% in your revenues, and that has to do with the facts that rates were adjusted for 2025. And then a 2.9% increase in the expenses with increased tipping and disposal fees. So a positive operating income of 692,000. And when we look at that, so you can see that that was positive in all years. So you're able to cover all of those operating costs with some additional amounts for each of the years presented. That's good to see. A lot of times we have cities that aren't covering depreciation, and this is covering depreciation and everything else, so
And if you'll remember, when we go through our utility rate studies, we look at that because we're also putting money aside for closing one demo cell, opening another, and planning all that out over the next 10 years. So that's why we structure it that way.
Right, and there's definite requirements for what you need to have set aside based on where you're at with the fill and
Yeah.
all of those things. So, yeah, fund looks good there. Sewage disposal, this one had just a small decrease in your operating revenues, 0.9%, so virtually the same as last year. And then a 3% decrease in your operating expenses, and that came across wages, benefits, and supplies. So again, operating income of about $231,000 for this year, and operating income for each of the 5 years that we're looking at here. A little bit smaller than waste management, definitely operating income, which is what we want to see. Same results from that perspective for the water department. You did have increases in your revenues and expenses in this fund. Revenues were up just under 5%, and that is partly due to the rate increase that happened in April of 2024. So this is the first full year of that rate increase, and then also consumption increase. So you had increased charges related to that. The expenses were up with wages and benefits, and then also some paid leave, which required additional staffing. So kind of a doubling up effect there. Repairs and maintenance also increased from the prior year. So again, positive operating results, operating income for this year and each of the 5 years that we're looking at. And then your last utility fund, the stormwater fund, again, a positive picture here. This is similar to the water fund with that rate increase that happened in April of 2024. So you had about a 3.5% increase in your operating revenues, 5.6% increase in expenses. There was a water quality project for Lake Alice, and then also some work on Water Plant Road. So again, positive operating results for each of the 5 years. So those rate studies are doing what they're meant to do and creating those positive results. And then we have your liquor store, and I can tell you that what we've been seeing across the state is decreases in sales. So the fact that your sales are down only 1% is kind of outside the norm. And your cost of sales were actually down by more than your sales, so you did have a small increase in the gross profit percentage again this year. And we'll look at that alone in a chart. Your operating expenses were up 3.7%. Again, wages and benefits, we see that increase across the board. You had an operating income of about $1.28 million, which is pretty similar to last year, and that allowed you to transfer about $745,000 to the general fund to reduce that tax burden for the city. So definitely contributing in a big way with the liquor store. And then we have the gross profit percentage, and you can see that has been increasing each year since 2021, and that is also not necessarily what we're seeing in other cities with liquor stores. The state does not have the 2024 report out yet. If we go back to 2023, the average was 26.7%, and you were at 33. So I would anticipate that for each 24 and 25, you're also above that state average, because we haven't seen increases like that across the board. And then we have your comparison on the following chart looking at west and east. Both of those contributing with an operating income, and the gross profit percentage at west is 34.0% and at east 33.3%. So both of those providing positive operating results. So those are the enterprise funds. Couple of charts that take a look at your tax capacity and market value and tax capacity rate. Starting with that tax capacity rate, there was an increase in 2025, but pretty consistent when you look back to 2021 and compare that to 2025, just a little bit of an increase. And on the next slide, you can see where your levy has gone, which is in the green on the left-hand side. So an increase from 6.6 million to 8.5 million. So that nice jump with that small increase in the tax capacity has everything to do with that net tax capacity. So that is up from 11.8 to 14.7 in 2025, which is actually a little bit of a decrease from the prior year. And I think, Bill, we talked about that being because of the Audit power plant
Right, yeah.
falling off in 2025. So, and we have seen that number too across the state, some of those market values going down in some areas and some of them still going up by big amounts. So really just depends on the community. All right, one last chart that takes a look at the entire city and your overall net position. So this is going to be all of your assets, capital assets, so land, building improvements, water, sewer systems, everything. All of your debt is included in this calculation, and this is your equity or value at the end of the year. So a nice increase, 6.5% jump, about 10 million. If we look at the categories of that, on the top, that brownish color is your unrestricted. That was up about 21.2%. Big part of that is those positive operations in your enterprise funds. And then also we had a positive impact on that pension number. So I don't know if you remember that. That's a number that gets allocated across the state, and actually we had a net benefit in 2025 that we saw. The middle there, the blue, that is your restricted. That goes along with the restrictions that are in the funds primarily, so things like debt service, TIF, other things that have been set aside from an outside source. Landing there, that increased a little bit from the prior year, but not a big change. Actually decreased, I'm sorry, but not a big change. And then the bottom, the green portion is going to be that net investment in capital assets. So that number is calculated. We take all of your capital assets, subtract any debt that is specific to them, subtract depreciation, which is the using up of those assets over their useful life, to get you this net number. And an increasing trend is what you want to see. It means you're investing in your capital assets, and you're also paying off your debt faster than those assets are depreciating. So if you compare that to like your mortgage, hopefully your house has some value at the end of the mortgage, and that's what's going on here. So if we look back to 2021, where you were, to where you are in 2025, that's a positive trend. And that's everything I intended to go over, but happy to talk more if you want to know more, or if Bill has anything left to say.
Any questions of Nancy?
Very good presentation. Thank you very much. I appreciate the work your company's done for the city of Fergus Falls. Bill and I have had a lot of conversations with the levy committee on fund balances. And based on the data here, let's just focus on the enterprises. As the profits have gone over year over year over year, is there a way to determine the total unrestricted cash that is specific to the funded enterprise or government assets?
Yeah, so if the enterprise funds, what we're showing you is just strictly operating. So below this, we factor in all of your debt activity. So there's going to be interest payments that would come off of that. And then similar to the overall perspective, for enterprise funds, we do calculate that net investment in capital assets and then an unrestricted number. So if you want to dig into those numbers, it's all in your financial statements. I don't know the pages, but it is there. And it will give you a net investment in capital asset and an unrestricted number for each of those enterprise funds. And I think that the goal is to make sure that your operating income is covering operating expense so that you can plan for future, because you're going to need improvements, obviously, and expansions and all the things. So those are all positive, but I don't know the details of what those numbers are at.
Page 44 is where that starts in the audit report.
Yes.
Yep.
And then we would want to, and I'm trying to nail it down. Let's be unrealistic, down to a vehicle. Be it,
Sure.
all the assets that this department has, this department has, this department has, that, like the fire truck, the ladder truck that we had to replace. I mean, is it covered enough to cover those depreciations?
Yeah, so that's what we're looking at when we're looking at the operating income, because in the operating expense number is depreciation, which is using up those assets. So again, we're taking and the ladder truck wouldn't be in your enterprise funds, it would be in your governmental, like you said
Correct.
earlier.
Yep, I'm
But
jumping out of the enterprise.
right, so in the governmental activities, it gets allocated by department, and then there's a statement of activities that goes through. It'll give you your revenues, your expenses for each category. So let's say public safety is going to be a category, and then it will give you revenues that are specific to that category to get you to a net expense. And that net expense is the amount that your property taxes are covering those additional costs. So you'd have to talk to Bill to get down to the granular detail, because it's not that detailed in the financial statements. It's at like a public safety, public works, general government, culture and rec, it's at those categories. in that statement of activities. But that does give you the long-term perspective, and that last chart gives you that from a citywide perspective, that
Correct.
yes, you are doing the right things to cover those capital assets.
Yeah. I think I was asking, since you've been involved with the city for so long, if there were buckets that you've kept track of as these assets were bought. And I know we've gone through transition with software, so I was just looking for a magic hat that you may have up your sleeve. Some
No, I left my
some-
magic hat at home, but, but yeah, it's definitely, there's been a lot of planning and a lot of thought that goes into that. And the tool that you use for allowing those capital budgets to be carried over, you can tell that each department is very thoughtfully looking at their capital needs and planning for the future and spending when they feel like they need to spend, but also saving for future purchases.
I've been impressed with the report. Thank you very much.
Good, thank you. It's always nice to hear that.
And obviously, the accounting department,
Yeah. Yeah, when we come to do the audit, they are prepared and they're here for us and they answer all our questions. And if they don't know right off the top of their head, they find the answer for us.
Yeah.
So, yeah, it's a great process from our side too, when we come in to audit the city.
and you're right, segregation of duties is impossible.
Yeah, I have a couple of organizations that don't have it in written form because they have a position that would, like, Bill's position would have no access. And for the size of the city that you have, for Fergus Falls, it probably doesn't make sense. So,
Correct.
yeah. Definitely cost versus benefit when you look at internal control.
Sandy and I were talking about that a little bit as we were looking through the drafts. And, you know, for instance, like I have authorization to make journal entries is what we've always, you know, in any fund of the city. Now, I will say with the new system, I've never made a journal entry under it. We always have someone else do it. So we've been segregating those duties. So we said, if we could get rid of the comment, would it, if I just don't do the journal entries like I haven't been, and we locked myself out of that, would we look at that? But that's something we would
Yeah.
discuss with you. There may be other areas where I still have too much access to remove that.
Right. And that's what we look at. When we plan the audit, we look at the internal control, and then we design our tests around those areas where there are segregation concerns. So we do a journal entry test and make sure that what you're telling us is how the system is working. And your payroll is also a big area. So even if we took care of your situation, you'd probably have to do a little bit with payroll to get it to a verbal recommendation.
Sure.
We're still gonna have the recommendation because it's never gonna be perfect. I have not seen that, and I've been doing this for a long time. So,
That's why I'm not worried about it.
right, right. And the council is involved, so seeing that as an auditor is always good. That you're listening, you're looking at the reports, you're asking the questions. That gives us a comfort level too.
Any other questions? Yeah.
Thank you to you. It's very comprehensive, and thank you to Bill and Sandy. I know this is a lot of work and a good thing to have off your plate. When you mentioned the liquor stores throughout the state, I know we don't have the reports yet, and that's
Right.
fine. It's important for us to know how others are trending. So when you say we're trending down 1%, what are you seeing so we can keep a pulse on that?
You know, it really depends on the liquor store, and there are fewer cities that we audit that have them, but what we've seen is maybe a 5% decrease in sales, also decreases in cost of sales, so pretty consistent gross profit percentages with just a little bit of trending down. Where yours is eking up, other cities are eking down. And when you look at that 26.7%, I can guarantee you it's not 33% now. It's just based on, there was a peak. COVID made sales shoot up in liquor stores across the state of Minnesota. That, I think, is what we're seeing come down. People are getting back to more normal consumption levels, and yeah. I think your liquor store manager has a good handle, obviously, with the results that you're seeing, that they're paying attention and making sure that if their sales are going down, their cost of sales are also going down. So nothing alarming at all there. It's all good still.
Right.
Yeah.
But I mean, globally, alcohol sales are down. InBev and Diageo both are reporting, drop in revenues.
Yeah, so the fact that you're where you are,
We still have winter.
It helps, right?
Ice fishing.
Right?
Any other questions? If not, thank you very much, Nancy.
Yep, thank you. And thank you to Bill and Sandy and the team for all